For more on everything going on in markets right now, we're joined by George Seay. He's the CEO at Annandale Capital. And George, I guess we'll just kind of start from the top with how you see things playing out right now, just in this environment where we've had a couple of days, a couple of big hiccups here in the market. We had a 6% sell-off 2 weeks ago today. Certainly volatility is back, but overall things are looking pretty constructive. And I think it's been a pretty solid run off those lows through April and May. How are you kind of seeing things?
Well, I heard you all talking about silly sports analogies earlier, and I would use one from my football days way back in the past and say, we all better be prepared to strap it on this fall. That was the old strap on your helmet and get ready for some crashes and some volatility, because we basically had a crash and then we had an explosion to the upside, and we've been basically chopping for about a month now. And with an upward bias, I would agree with that. But you saw yesterday just how quickly mood can change. We were down nearly 3%, and everybody all of a sudden is panicking over the increase in viruses in predominantly red states, whereas they weren't panicking for the 2 weeks before then when the same thing was happening. So I think the market's going to be very emotional and quasi-bipolar through the fall until we get a real remedy that works for this virus, and then hopefully eventually get a vaccine. But we're all going to have to get used to nuance, and part of that nuance is being open again and having to socially distance and wear masks and continue on with life, except for the most vulnerable of us who should be sheltered in place for the most part.
Well, so let's think about or talk about what's been done so far, at least on the fiscal and the monetary side. Obviously, the Fed, we know where they've kind of gone over the last couple of months, but we have this looming date, July 31st, where the CARES Act is going to run out. And there's been some concern that if we don't get a re-up in the unemployment benefits, and consumer spending is actually held in quite well in the last couple of months. I think a lot of that is from what's been done on the fiscal side. Is that something you're looking at as a risk here for the market that could hurt sentiment and hurt the labor situation, which even though we've seen some green shoots there, still remains quite challenged?
I don't think it's a risk for the market, to be frank. I think Jerome Powell has been a hero throughout this whole process, and with interest rates at zero and the Fed saying they're going to do unlimited things, printing money, throwing money at all sorts of assets all across the world, especially in the U.S., our corporate bonds, they may even start buying stocks at some point. I think that's the big support of the market. I think what you're getting at is more Main Street and the overall health of our country and our economy going forward, and people being able to provide for themselves. And I think the president and the Democrats have both said that they're very willing to consider another stimulus package. And then you have the Republican Senate saying, look at the federal debt and look at our deficit spending this year, and let's just watch for a little while. And I actually think both approaches are wise. I think we should slow down here for a minute, but we should be open to providing more assistance for people who are severely hurting right now, and keeping them from falling into despair or economic situation where they're exposed to homelessness or not being able to hold on to their apartment or home and not being able to feed their families. So I think we're kind of splitting the difference pretty well right now.
And so then, George, before we let you go, as you look at the markets right now, what opportunities stand out to you? What do you like? What do you not like? And what have you felt compelled to do over the last couple of months here?
We've been doing some senior lending private equity, where you're kind of the lender of last resort to over collateralize companies at double-digit interest rates so you can get equity returns for bond-like levels of risk. We've been doing quite a bit of that. We've been doing some secondary private equity, and in the public markets, we're certainly not adding to the FANG stocks. Actually, I've been trimming some Apple and some Microsoft and so forth and so on, which I was a little early to start doing, but we're not eliminating those positions either. But we've been adding more towards small cap, value stocks, international stocks, and midstream natural gas stocks in particular, because the demand for natural gas has not declined near as much as oil, and we're going to have to move this stuff around. Yep. And those stocks have very high dividends. They're very cheap, and long-term they should do very, very well.
All right. George Seay with Annandale Capital. Always great to get your thoughts. Hopefully we could talk again soon. Have a great summer. Stay safe. George, appreciate your time.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.